Welcome to First Assets. This is Narayan Kini. This is a season of IPOs and the next one is from CAMS. Viewers, please note every company is unique and different. Unlike most companies, CAMS is not promoted by a natural person. CAMS is promoted by a company called Great Terrain Investments Limited, which is owned by a company from Mauritius known as Harmony River Investments Limited. Harmony River Investment Limited is owned by a US-based SEC-registered company known as Warburg Pincus LLC. NSC Investments Limited, a long-term investor in CAMS, is completely exiting. Great Terrain, the promoter, is reducing its stake. To know more about this, please watch this video till the end. Let's begin. Computer Age Management Services or CAMS is Chennai-based R&D agents established in the year 1988. CAMS has predominantly built its business around mutual fund industry. Mutual fund industry is heavily regulated and subject to continuous changes in regulation. CAMS has been able to come out with solutions from time to time as mutual fund industry went through multiple challenges with respect to changes such as NAV computation, time limits for transaction, complex inter-scheme switches, dividends and reinvestments, T+1 redemptions, reconciliation, multiple brokerage structures, friendly investor support system and so on. CAMS has been able to stay ahead in this complex and ever-challenging environment. This ability to continuously improve its technology has resulted in maintaining its leadership by a huge margin. CAMS is the India's largest register and transfer agent of mutual funds with an aggregate market share of 69.4% based on mutual fund average assets under management. Mutual fund clients include 4 of the 5 largest mutual funds as well as 9 of the 15 largest mutual funds based on AAUM during August 2020. CAMS offers an integrated and customized portfolio services through its pan-India physical network comprising of 278 centers spread over 25 states and 5 Union territories as of August 2020. Advanced technology is an entry barrier to new entrants. As mentioned earlier, it's a very complex technology and processes involved in RTA business. CAMS has managed to achieve leadership, scale, extensive branch network and good mix of revenue. This poses a great challenge for any new entrants. CAMS has average client relationship in excess of 15 years. It is difficult to break such a long-term business contracts by the competition. In all, we can say CAMS has strong and long-term clients which can ensure steady business growth. Services offered. Though significant part of the business is around mutual fund industry, CAMS is also present through subsidiary companies offering its services to insurance sector, alternate investment funds, KYC registration agency, software solutions, banking and non-banking finance companies. CAMS has competition in most of its activity, but they are smaller in size. To name a few companies, in mutual fund services, Carvi Fintech Limited, in insurance services, NSDL and CDSL, banking and non-banking, it is Carvi, software solution, K Fintech, KYC registration, CDSL and .x. In electronics payment collection and service businesses, CAMS has competition from BillDesk, TechProcess, Razorpay. Let's look at the summary of financials. Revenue from operations has grown from 641.54 crores in the year 2018 to 699.63 crores financial year ending 2020. Profit after tax has grown from 146.31 crores to 173.46 crores. Net worth has gone up from 443.52 crores to 539.81 crores. CAMS has a very unique shareholding and ownership pattern. Great Terrain being the promoter with 43.53% and NSC Investment Limited being the largest investor with 37.5% stake and the balance stake from HDFC and others. Since promoter is an institution, we have to understand the antecedents of the promoter. we have made an attempt to understand the promoter of promoter. Promoter of CAMS is Great Terrain Investment Limited. Great Terrain is owned by a company called Harmony River Investment Limited based in Mauritius, which is a holding company. Harmony River is owned by Warburg Pincus, a US SEC registered company. 11 PE funds have invested in Warburg Pincus, which owns Harmony River. In effect, Great Terrain is nothing but an investment company owned by PE funds. Therefore, Great Terrain, not being a natural person, has on its own no experience of running any business. As NSC Investment Limited is completely exiting this business and Great Terrain is substantially reducing its stake, we need to closely look at the post-issue control of CAMS. NSCIL is selling a part of its stake to the extent of 38,400 shares to SBI Life Insurance and the rest to the public through offer for sale. Great Terrain is selling 61,08,400 shares of its stake just before the issue of start to multiple mutual fund schemes of SBI, ICICI Prudential and HDFC, and also to some PE funds. Request viewers to closely observe the sale of stake to institutional investors. With this, Great Terrain, the promoter, is reducing its stake from 43.53% to 30.98%. This may be a significant churn in the long-term investors who are with the company. If you observe from the chart, post-sale, NSCIL would be having 0% holding and Great Terrain will be selling 61,08,400 share and post-issue it will be holding 1,51,15,600 shares, which is equal to 30.98% of the holding. Risk factors. Let's look at the risk faced by the RTA industry. R&T business is highly regulated by SEBI, RBI, IRDA, in addition to compliance obligations of KYC, KRA, PMLA, etc. It may face hurdles due to lower incremental growth in mutual fund and insurance sector, changing and evolving environment in the regulation and compliances, changes in investment behavior in the country, in-house development of certain activities due to advancement in technology may result in reduced outsourcing, overall cost pressure due to steady reduction in total expense ratios by the regulators. Risk specific to the company. Significant reduction in stake by the promoter from 43.53% to 30.98%. Complete exit by NSCIL, a significant and long-term investor. Promoter is not a natural person and represented by key management personnel to manage the business. Breaches in data security and frauds committed by the employees. Disruption in the technology. Skewed business concentration on MF industry at certain risk the CAMS is carrying. Mutual fund schemes, insurance companies and other PE funds are taking stake who are pure investors and not RTA experts. Valuation of CAMS is another issue as there are no other listed companies in this space to compare. We are going by the institutional investors who are buying this company at the same price offered to the public. Issue highlights. Offer for sale up to 1,82,46,600 equity shares from NSCIL. The issue is amounting to rupees 2,240 to 2,242 crores. The issue has a reservation for employees to the extent of 1,82,500 equity shares. The issue is open from 21st to 23rd September 2020. Bid lot of 12 shares and multiples thereof for a face value of rupees 10. The price band is between 1,229 to 1,230 per share. Retail investors can bid up to 13 lots amounting to rupees 1,91,880 rupees. The issue is reserved to the retail category to the extent of 35% and non-institutional bidders have 15% reservation. QIBs have 50% reservation. To sum up, viewers are requested to keep in mind the following. There is a considerable churn in the institutional investors. CAMS promoter is not a natural person. Promoter holding will come down to 30.98%. Key personnel managing the business, thereby it's a professionally managed company. CAMS has a lion's share in MF RTA business. MF is one of the fastest growing sector. Mutual fund schemes are also buying the stake in this company. Disclaimer: information herein narrated is extracted from the draft red herring prospectus with an intent to give a brief summary of the issue and does not cover all the details. We don't claim any authenticity of the information nor responsible for your action. We are neither responsible nor accountable for viewers' action taken based on the information covered in this video. This is neither an advice nor a recommendation to subscribe to the issue. Please read the red herring prospectus carefully and take the help of your financial advisor. This is Narayan Kini signing off. Thank you.